Well, thank you very much, and hello and welcome. So my name's Louise Beaumont, and today we're discussing Brexit or COVID, what's hurting more. I'll start by introducing myself. I work with legislators and regulators to create disruption. I work with corporates to help cope with disruption and with startups to exploit disruption. In practice, this means I chair companies, working groups, conferences. I advise organizations from incumbents to scale-ups, and on occasion, I invest in and take leadership positions with very early stage startups. But on to today, and more importantly, our panelists. We're discussing Brexit or COVID, what's hurting more, and we've got both the great and the good to discuss this with us, and I know you're going to be using that chat functionality to fire questions at us, which I will grab and pass on to our panelists at the right moment in the discussion. So don't hold back from asking your questions. So first of all, we've got Paul Townsend, Exec Chair of Vitesse. So Paul, tell us what we need to know about you and about Vitesse.
Paul Townsend. So I've been in the fintech space probably since 2002. Worked at a number of companies, Vitesse obviously now, Envoy previously, WorldPay with PIF for a period of time, Earthport for a period of time, so lots to do with online payments and moving money around in the last few years. Prior to that in banking, Vitesse is focused on corporate payments, payments out globally, has quite a wide range of clients, but it's focused primarily insurance and some other payment providers. But it's all cross-border payments.
Perfect. And the example that really resonated with me about Vitesse was your Lloyd's of London insurance market client, where the thing that struck me was that insurers can see their claims payments and their funds in real time. So that was something that brought Vitesse to life for me. Next, over to Praf. Praf, you are Chief Strategy Officer at Nuvei. Who are you and what is Nuvei? Go on, introduce yourself, Praf.
Yeah, lovely to see everybody on here. Thank you, Louise. So, Praful Mara, I'm Chief Strategy Officer at Nuvei Digital Payments. A little bit about myself. Similar to Paul, been in the fintech business for probably over 20 years, but the original part of my life was in corporate cash management and treasury with the likes of RBS, NatWest, and ABN AMRO. And then the last 20 years, I've been involved in payments, really with the likes of WorldPay, but also setting up companies around the world, as far as Singapore, Australia, and the LATAM region in Mexico. So my background is all on payments.
You are single-minded and devoted to the cause, Praf.
Pretty much so. I love this this business. It's unique every day, every second. Just a little bit about Nuvei, if I may, please. So Nuvei is a Montreal-based headquartered business. We are a global payments company, really enabling both online and offline merchants to be able to trade within their domestic, regional, or international markets, helping them to take payments from their consumers around the world in whichever format, cards, debit cards, or alternative payments, whatever they want to do, whatever they want to take, we enable them to do.
And it was the range of that really caught my interest, because I think you can handle everything from major card schemes all the way down to the most local of local voucher systems. Yes. There is literally nothing you can't do in the world of payments, the types of payments that you take. And I thought what was interesting was the online and offline. And of course, I'm sure you've been taking those offline companies on during the COVID period.
Yes, exactly. So Nuvei is uniquely positioned, which really is able to provide all the major card brands, the Visas, the MasterCards, the Amex, but also localized ones like the China Union Pays and or the WeChat Pay Alipays, which are very big products. but we also have over 455 alternative payments. So if somebody in Brazil wants to make a payment locally in Boleto Bancário, we can enable that. If they wanted to take Kyonabi in Japan, we can take that. So the ability is there to make sure the merchant and the consumer can take the payment.
Perfect. And that brings us to Nischa Us. Tell us who you are and bring Banking Circle to life for us, please, Nischa.
Yeah, thank you very much, Louise. My name is Nischa Us. I'm the head of sales UK for Banking Circle. Banking Circle is a bank specifically focusing on the fintech market. We offer very traditional banking services together with innovative solutions such as virtual IBANs. We have various payment capabilities, so we can do international payments, but also local payment. We offer local payment capabilities, and FX conversions in a nutshell.
Perfect. Well, there you go. This is the Banking Circle is a bank focusing on the fintech segment, and I think that fintech segment has been very, very hot over the recent years. And I'm sure they're very glad to have you around, because it's been, in the early years of fintech, incredibly difficult to get that banking relationship going. So I think thank you to Banking Circle for riding to the rescue there. Now, to the topic in hand. We're living through both Brexit and COVID. So to put this in context, we're living through two concurrent shocks, one more regional and one very definitely global. But which is having the greater impact on payments? What are the consequences and how are we coping? So in the blue corner, we have Brexit, and in the red corner, we have COVID. I think I'm sounding a bit like a boxing promoter here, which isn't, I hope, the first thought that you would have looking at me, but never mind. Let's start with the blue corner. Let's start with Brexit. And Paul, I'm going to come to you first on this one. So Paul, is Brexit a wholly positive thing? It's creating a differentiator, or is it just, blasted complexity and cost? Paul, coming to you first with that question.
Yeah, thanks, Louise. I think my view on this is that Brexit so far has been more of a pain than a gain. It's certainly cost us a significant amount of money to set up in the Netherlands with our Dutch subsidiary. There's a lot of additional regulatory capital requirements, little reporting requirements, which were not there before. It was much easier for us to do business in Europe. There's a lot of politics around Europe about how governments and local regulators are looking at Brexit and how they view UK firms, some taking quite hard lines, some being more relaxed. I think over the longer term, I think at the moment it's probably a bit hidden by the COVID issue, i.e. we're not seeing or not understanding how bad Brexit is because COVID's taken up so much of our time. But I think for Brexit will be an issue as we go forward, and I think it's still settling down, and things like equivalency and others need to be resolved as soon as possible. In terms of the gain, obviously, we're in Europe now, we're allowed to transact there, so I suppose there is some benefit there, but all it's doing is just supporting the business we could do previously as we were a UK firm with a passporting. Does that answer your question? Yeah?
Yeah, so more pain than gain.
I think so, yes.
Yeah, I'd say thus far, more pain than gain. Certainly more complexity, lots of regulators. Are they moving forward as one? Are they cohesive? Are they aligned, or are they all over the place? How are our regulators?
Yeah, they're certainly not cohesive at the moment. We are seeing different banks respond differently to us. We obviously have bank accounts in various markets around Europe. We're seeing maybe someone like the Polish regulator take a more relaxed view than, say, the Dutch regulator. The French regulator taking quite hard lines, even publishing names of UK firms that French companies should not deal with. So I think there is a disparity. It's not coherent. It needs to change. I think at the moment what's happening, Europe is holding out to see how many firms they can almost bring into their environment before they even look at something like equivalency or passporting. And I think that's going to play out over probably the next 12 months. So it's not coherent. It's quite painful. And I'd wish it hadn't happened.
Right. Well, going to come to you next, Prav. Let's follow that. It's painful. Wishes it never happened. Come on, is it Brexit? Surely there's some differentiation here, or is it? Do you agree with Paul? It's complexity, it's cost. You wish it had never happened, Prav.
Yeah, I would agree with Paul. But it's interesting the angle in which he came in, which is a UK company going into Europe. We were licensed and are licensed and regulated in Europe going into the UK, which meant the reverse of what Paul effectively done. Now, why is that important? Is because if you're already in Europe and you want to operate in the UK, they permitted you a what they call a temporary permissions regime agreement, which could be a 12-month or 12-month or 36-month grace to sort of go and set up things. So that allowed us to effectively continue to trade, help our merchants to trade accordingly. But the pain is that you would have to set up a company in the UK, get the FCA approvals, getting the card schemes, all of them, by the way, they're not just one, and there are long processes of that. Then the complexity of getting our merchants to sign agreements based on the UK company. So the complexity is huge. It's making sure that we are cascading, smart routing the appropriate transactions for our merchants and their users and their customers to make sure they comply to rules and regulation. And I would say, I know MasterCard's on these particular forum, also the card schemes are, as of the 1st of October, changing their cost structure to add more cost to UK merchants processing in the UK rather than in Europe. So it's a overall knock-on effect, in my opinion.
So you described there a huge range of different complexities, you know, complexity on complexity, creating more complexity.
Yeah.
Surely that results in costs and increased costs for you, and those costs only go one way, right? You have to pass those on to your merchants.
Well, not necessarily. So this is the beauty of what Nuvei's created. Whilst we have created the new costs through setup of companies and so on, the underlying platform, the operating platform that we have is a singular contract, singular integration, singular service, the ability to trade domestically, regionally, globally, still the same. It's not impacting my merchants in any shape or form, other than maybe commercials that are driven by the card schemes that will be brought in 1st of October. So what we are enjoying today in cards at 30 basis points and debit cards at 20 basis points will increase to 1.5% to 1.1 and 1.15. So there is increase. That is direct increase that we have to pass on, but all of the underlying stuff remains with us. So it's not impacting our customers.
Okay, so that's really interesting. We have Prav coming from Europe to the UK. We have Paul going from the UK to Europe, and the perspectives they outlined for us there. Nischa, let's come to you next. How does it feel for Banking Circle? You know, how is it complexity for you? Is it increased cost for you? And if so, where's it hitting? Where's it hurting? Nischa.
To be honest, I think we're in a really good position. We're licensed out of Luxembourg, so we have a Luxembourg credit institution license, and we have a branch in the UK. So we're allowed to operate both in the UK and in Europe. So for us, we're quite in a lucky position that we can still cater to our clients who are both in the UK and in the EU. What we do see, and I just repeat to what Prof just said, you know, the FCA introduced a temporary regime which allows the EU businesses to operate and use their EU licenses in the UK until 2024. But then the ECB, the European Central Bank, has stated, well, you know, that's all nice and dandy, but UK payments businesses now need to be licensed in the EU. So what happens is we're seeing a surge from our existing clients and new clients coming in who need to onboard their entity in the EU or in the UK. And that does impact us internally in our onboarding costs, for example, because we want to cater to our clients and we want to onboard these entities. But what happens is they are creating these entities, but there's no existing flows yet. So you're having these entities without no flows, and you have to wait till flows are being migrated. So in that way, it impacts us just more from our onboarding cost.
So you've got kind of front-loaded costs as payments companies, which previously would have onboarded one office with all of the flows. You've now got them onboarding, doubling your onboarding costs in that sense. They're onboarding two offices, one in the UK, one somewhere in Europe, let's guess, Ireland or Lithuania. And they're not dividing the flows yet. So it feels like you've got one office with all the flows and one office which is just there to keep the regulators happy.
Correct. That is completely correct. And I think another element that we're seeing is that due to Brexit, a lot of EU banks are placing like landing fees if a SEPA payment comes in from a GB IBAN. Again, this is something that we cater to because we have those two, we cover both Europe and UK. So a lot of clients come to us and say, can you help us process these SEPA Euro payments into the EU? Because otherwise they're getting hit by landing fees, where initially there was no such thing.
Okay, so we've uncovered a whole new set of costs there. So we'll get into that in a bit more in a minute, I suspect. If I just reflect, so far everybody has said, and I think this resonates with what I've heard out there in the marketplace, Brexit has increased complexity and thus it's increased cost. It's forced organisations to set up mirror offices, one in the UK, one in Europe. So Paul, a question for you. Are both parties, the Europe and the UK, are they making it equally difficult for each other? Is it handbags for Dawn, or is it that one party is trying to be more reasonable? I mean, I hate to ask you to characterize it, but is this handbags at Dawn, Paul?
I suppose I've not been party to what goes on at government levels to see if there's handbags at Dawn at the government level. I think the local regulators in Europe are themselves struggling to decide how they move forward. There's clearly politics involved, so handbags maybe not, but maybe a desire to have more of the financial pie. So they've seen it as an opportunity to take from London. But I don't think any of it's nasty. I mean, our banks certainly in Europe have been supportive and have tried to help us. Some just feel that they day one, some of them said you can't process out of London anymore. That's the rule from our regulator. Others have said, look, you can leave your UKMC processing until June, July, but then we need it to move to your BV operation. So they've been flexible on that basis. But I think certainly the French regulator has been quite tough. So maybe they're more of a handbags at Dawn level. But I think the Dutch regulator who worked with has been very good, very supportive. It took a long time to set up the account, but yeah. So not handbags at Dawn, but certainly difficulties. I think the UK is trying to be reasonable, but obviously it's in the UK's interest to be so, whereas I think it's more in the interest of the EU not to be so, because there's a financial gain for them in holding out.
Yeah, and I also think that Paris and Frankfurt have made it really clear right the way through the whole process that they were going to seek to build up their own financial services sector off the back of this. So I think we're definitely seeing some of this. Now, Nischa, I'm going to come to you first with the next question, because I heard this really interesting phrase and I want to know, is it just made up or is it actually real? But the really interesting phrase I heard was one about IBAN discrimination. So is this a myth? Is it real? Is it actually a problem? IBAN discrimination. Nischa, give me your view on that, please.
It's absolutely real. It's something that we come across a lot. Definitely not a myth or a fairy tale. It's funny though, because if you think about it, the way SEPA is set up, the SEPA region, it was all to be uniform, having one IBAN covering, all these EU countries. But I think it's not as much IBAN discrimination, it's more in-country IBAN discrimination. For example, if you look at France, the French government would like to pay out to an FR IBAN. even in Germany, they like to use DE IBANs. And I think it's more related to the country itself, not accepting a different type of IBAN. But it is a bit silly because a DE IBAN is reachable for an Italian person and vice versa. So yeah, it's definitely something that we've seen, but it shouldn't be an issue, if I'm really honest.
Okay, so it's definitely real, not a fairy tale, but a bit bizarre. Okay,
Yes.
Praf, I'm going to come to you next and then Paul, but Praf, what's your view? IBAN discrimination, not a fairy tale, definitely real. Where do you stand on this?
Well, it's interesting because we consider ourselves enabling merchants, users to pay for something. We collect the money, we need to bank it, and then we need to pay the merchant in their bank account in whichever jurisdiction that they want within the regions. So what Nischa is asking is, or saying is, there is some form of discrimination. And for me, any bank that complicates my capability to settle to my merchant on time, every time, has an issue with me, because that means that I'm not, obliging to my obligations that I have with my particular merchant. So I've worked with Nischa and certainly Paul for many years, and there are always nuances that we have to discuss, to iron out, to make sure that that payment goes to my merchant on time, every time. And listen, it's a cash flow thing, right? If they don't get the monies on time, they have issues. And these folks in this current time, moving from a physical presence to an online presence, wants their money on time, every time. So I would concur with what Nischa has said before. Experienced it in the past as well.
No, you've lived it, you bear the scars. Paul, what about, your view? What do you see, Paul?
We haven't seen so much of it from any, in terms of additional fees being levied or any sort of rejections because of the IBAN, but that may be because we've processed everything in Europe from a European IBAN, so I suppose it wouldn't be an issue. We have seen some of our clients say that they have seen some additional charges levied on transfers into their accounts, but that tends to be the consumer-related ones, and I think what it's saying is that the bank is treating them as offshore transfers, even though they've got an IBAN. It's a UK IBAN. But in terms of most of our payments, we haven't, touch wood to date, we haven't seen that issue. But we may be lucky, or maybe people aren't telling us.
Okay. I've had a question in from the audience, so thank you, Dan. You're now officially my favourite because you've put your first question in. Thank you very much. Paul, I'm going to stay with you for this question from Dan, which is, why can't SWIFT do more to reduce the regulatory frictions across markets? So, SWIFT, they need to do more. Paul, can I have a report card on SWIFT, please?
Well, we use SWIFT as little as possible because we route via local banks wherever we can. I think SWIFT will, it's a messaging mechanism. It's run by the banks. Obviously, the banks en masse, there'll be more European ones than UK ones. I would imagine that it's also not in their interest to make it easier, those banks. So I imagine the bodies will not be fighting the corner of the UK banking industry. So I think it's a big ask for SWIFT. They obviously do not want to become political. They're going to want to stay on the fence as much as possible. They'll let their members drive it. Their members, I imagine, will not want to drive it. But I think this issue is around governments. From a UK perspective, the UK government trying to reach some sort of equivalency with the EU at some point probably in the next 2 years. But I can't see it in the next year, to be honest. PSD2 doesn't really allow for it. So there'd have to be legal changes. But I don't think we can expect SWIFT to sort of be the supporter of that, unless the banks all get together and say that's what they want to happen. It's still a member organisation at its heart.
Perfect. Well, thank you very much. I'd like to ask our audience, if you've got any further questions, ping them over. I will fire them in. You can't now be my favourite because obviously Dan has secured that position for life. Right, one more question on Brexit before we get on to the sheer nastiness that is the COVID plague. But Brexit, a question on talent. Praf, I'm going to come to you first on this. Pre-Brexit, when we were all arguing about it and deciding which way to vote, one of the huge arguments from the fintech community was that talent would go. Talent would evaporate. We wouldn't be able to bring any more talent back into the country. Are you finding it? Has this come true? Are you finding it hard to get your hands on talent, or has this issue just been obscured by COVID, which has changed the game so entirely that geographical barriers have basically evaporated over the last year? So, Praf, talent, is this an issue? And can you line that issue up to Brexit? Praf?
No. So for me, talent is talent, and talent will move wherever they see an opportunity to develop, to have a better life, have a better understanding, learning, and so on. So for me, talent has not been disrupted by COVID, maybe from a travel perspective or a geographical movement perspective, if they wanted to repatriate, etc. But no, talent for us, and we've done a huge recruitment drive over the last 12 months, and we continue to do a huge recruitment drive, and I'm talking over 100 people recruited because of our growth, and we've hired great talent locally, internationally, and regionally. So for me, it's always about looking at what we as a company can offer them for their development, and that talent comes that way because of their the growth, the learning, the capability of being somebody that could be domestic, learning from an international perspective, broadens their horizon. So talent has been good for us. COVID hasn't restricted it, actually probably focused it more, because people have sat in their homes and thought, what do I need to do to broaden my expectations, my learning, my capability, my mind, mental health, and that's what's been very good for us. In not the COVID, but the idea of actually enabling somebody to move. Just so I'm clear on that.
I think we get where you're coming from. So Brexit has, that argument, perhaps as a function of COVID, but that argument is just not holding any water at the moment.
Not for us.
Nischa, what about you? Before I come to Paul, Nischa, is it just not talent, not an issue for Banking Circle? You're laying your hands on it wherever you go. What's the truth, Nischa?
The truth is, it's very difficult to find really good talented people. Whether it's COVID or Brexit, is in general, it's really hard. But to be fair, I agree with what Prof is saying. If any, COVID has actually made it a bit easier, between brackets, to actually get more people in from a different jurisdiction. Someone who is based in the Netherlands or in France. It showed that, if anything, COVID, it's not much Brexit, but COVID has actually shown that remote working can work, as long as you come into the office now and then, because that's a different conversation. But to actually attract and recruit talent, I think it's made it easier because people are more open up to it. And I agree with Prof saying, you have more, you can conduct calls virtually and etc. But yes, of course, there's an element of traveling I think still needs to be involved, and an element of human interaction. But yeah, I think it's actually pushed boundaries and being open to other people from other jurisdictions. Yeah.
Okay, Paul, what about you? Talent for you? You're coming from the UK into Europe. What are you seeing?
Well, I think in the Netherlands we've recruited some good people, and that's been a positive for us. So if there is a positive for Brexit, that it's a good team. It's given us a bit more depth in terms of 2 locations, maybe. So I think that's the positive. In terms of we've recruited heavily as well last year. Mainly in our sales environment, that was relatively straightforward. I think where we're seeing tightness is probably in tech. There's a lot of demand for tech during the COVID thing, maybe not so much Brexit driven, but I imagine there's tech guys that have moved back to their home countries and maybe not available. But yeah, I think where we're seeing most difficulty is in the tech side of recruitment, and we do all our tech in-house. And that's the challenge. It's based in Manchester, but it's still difficult. They can work anywhere, as the others have said, but that seems to be the difficulty for us. But I'm not sure if that's just Brexit or whether it's just there's a pent-up demand for more technology, as people want to move more. With COVID, more perhaps than Brexit, want to become more automated. They're hiring technicians to achieve that.
I guess in my mind, the way I would summarize it, it feels that the effects of Brexit have been overshadowed by COVID. And we're in a period which we're sort of still in the honeymoon period. of working, and we haven't seen those long-term effects. Would that strike you as a fair summary generally of the first half of our conversation? Paul first, then Nischa.
Yeah, I think definitely. I mean, I think without COVID, Brexit would have been a much bigger play. I think regulators and governments would have probably focused on it more in terms of how they react to people operating in these markets. I think everyone's almost forgotten Brexit because of COVID, but I think that will change probably in the next 6 months as COVID perhaps resides in Europe and Brexit starts to take hold in terms of people getting to grips with what's happening day to day in their business. And as you see some of the bad effects, banks and regulators will move to close down UK firms. They'll look where the flows are coming from, how people are operating, and they may take action against people if they think that they're not following the rule of the law or not going with the spirit of what Brexit has brought about, which is that there's no equivalency. You cannot operate in Europe without a European license.
Okay. So thank you, Paul, for that summary. Feels like a honeymoon period. Nischa, where do you stand on that? Honeymoon period, or are we through that for you?
I'm through that. For me, it's no longer a honeymoon period. I think I do agree with Paul saying. I think people have forgotten about Brexit. But what COVID has done, yes, working from home is nice and it's more, it helps. It can help. But I think Prof mentioned something there as well. There's a couple of elements that have also escalated during COVID. One, mental health, people not being able to interact, not seeing your colleagues, even being, if you are new in a team and you haven't met your team, that's a challenge. Not being able to see your colleagues face to face, and that's just internal. External as well, not having the events, not having conferences, not being able to see your clients face to face. Love to see Paul and Praf for a lunch, for example. So these elements are quite important.
Okay, Praf, honeymoon period or longer.
I believe a honeymoon period. Why? Simply because if you look at all of the transport, the deliverables of the goods and services that would normally be doing has been stopped by COVID. So the lorry drivers, the all that sort of logistical side of it has stopped to some greater or lesser degree. When and God willing, COVID does come down. And we get back to normality, people will suddenly say, oh my God, I got to fill in a form. I got to do this. I got to do that. And then what will come out is the complexities of what Brexit has brought. And I think COVID has kind of masked it for now. So I think the honeymoon period is coming off fast, but I think it will be much, much more as we start to go back, God willing, to normality.
Okay, so that's kind of the Brexit, and I know we've covered a lot of COVID stuff already, but that's kind of Brexit in the blue corner. Now let's get over to COVID in the red corner. The obvious thing about COVID is absolutely everybody immediately basically went online. The switch to digital was absolutely epic. Has this made your clients and indeed their clients, are your clients and indeed their clients more demanding?
Lost you
that
there,
was a question to Nischa.
Oh, okay. Sorry, I lost you there, Louise. Yes, in a way they have been. I think the switch from offline to online has made people very conscious of receiving goods real time, receiving their funds real time, and being very aware of where their funds are. I think it has also cost, has actually led to us developing better solutions. So, for example, webhooks, which is instant notification if funds have arrived into your account, or even our instant day settlement line where you can pre-fund the merchants who you normally would have wanted to wait a couple of days. They want to receive the funds straight away. So, yes, it's definitely impacted, but I think it's positive because it also pushes us to be more innovative.
Okay, so I certainly experienced that one about push notifications myself. If I move money, I want to know it's gone. If I move money, I want to know it's arrived. So that push notification absolutely resonates with me. Praf, coming to you next. I mean, the vast majority, surely, of your customers are online. Not all of them, but what have you seen? Are they more demanding? Are their customers more demanding?
No, absolutely, they're more demanding because when you really look at merchants that are perhaps both physical and online, lots of them had to change very fast, very quickly, making sure that their providers, their partners like us, are enabling them not just what they've been used to, the traditional cards, but all of a sudden they want to reach out into countries that they want to be able to sell their goods and services. So we've seen a massive growth in the online space. Indeed, the last quarter's numbers that we've published for Nuvei Corporation, 87% of that particular revenues came from online, and that's a significant growth for us. It's massive. Is the merchant, the customers demanding, wanting different ways to make payments? Absolutely. And it's instant, right? They're shipping goods and services, but also it's e-games, content, deliverables that is taken much more flight than your usual apparels that you're ordering 5 items and picking 2. Folks are wanting different form of entertainment, and that's driven a different behavior as well. So yes, absolutely important.
Okay, so everyone's demanding. Paul, do you concur? Is this something you see? Huge, not just a huge demand, but demanding demand.
I think Vitesse is focused on certain verticals. I think we've got a very sort of professional payments group that use our channels. They haven't changed much. They've always been into APIs and speed and everything else. Some of our insurance clients and that insurance ecosystem perhaps was a bit more used to, uploading batches, doing individual payments. That they've shifted towards demanding APIs or wanting APIs or host-to-host connections. So we've seen an uptick in that sort of them wanting to connect their platform to us because people are not in the office together authorizing payments. They want to just go through the system automatically. I think that's where we've seen the additional demand, if you like. It's in this desire to have API and real-time connections and not use batch uploads or individual payment flows from those sectors, and to get the reporting back, almost immediately, whereas before, they go online next day and download it themselves. So a great more demand for automation with the insurance sector, maybe not so much with our payment clients who are very sort of sophisticated already. Payroll clients fit in between the two, but they've already sort of driven from, technology today. So I think there is a split by vertical and by past sort of experience, if you like. Also, we've also seen a bit more demand for almost total outsourcing of payments to us, by moving almost the entirety of their payment book to us to handle on their behalf, rather than leave it with a traditional bank that doesn't have the APIs in place to do faster payments or European SEPA payments.
So they're just moving the whole shebang over to you.
Yeah, they're just saying, we're going to move everything to you because we know you're API driven and we can just let the files flow through. We don't have to have manual intervention, and manual intervention takes people either in the office, and if they're working from home, there's more risk because they're using more devices. APIs is de-risking them from a hacking cybercrime type perspective.
Oh, de-risking from hacking and cybercrime, right? Good. I see we've got one more question to come in. I'll come to that in a moment. But as a function of COVID, Paul, I'll stay with you on this one. Obviously, it's everybody immediately when they could move to working from home. I'm sure you were doing a bit of that anyway, but have you had to make any unplanned investments in tech, in people, in services, or did you just click over with nary a furrow in your brow? How is it for you?
Yeah, no, we'd always had a working from home environment for most of our teams, but not for operations. So the main change for us is our operational group has moved from a physical to an offline sort of working environment. From home, it's very different. They're not particularly used to it in terms of their backgrounds. They used to be in the office. So I think mentally that's been a change. We've obviously had to supply them with laptops and equipment which is secure with VPNs and everything else, which had a technical overhead and cost. Not too much because those things are not overly expensive. But I think it's more the psychological shift for our staff than perhaps the day-to-day working. It took a little time to get used to what you do, but in operations, what you normally do, I don't know if you're authorizing payments or you're engaging with clients, there's normally a two-way interaction in the office going on, and you lose some of that at this working from home thing. You're almost having to pass across and then communicate on a device, and that has to be quite seamless. We are obviously doing the things that everyone else is doing, so weekly calls with the whole team, individual teams meeting, operational meetings, those type of things.
So it forces you to address workflow
in
a very structured way, in ways that normally in the office it might have been more human driven. You've now got to have a very structured workflow in place.
Exactly, and I think going back, that will also come into play in terms of workflow. So we're already looking at workflows to manage the office a bit more efficiently in terms of working from home. So we're not going to have an office that can take all of the people, so we need to manage that flow a bit more efficiently.
Okay, so it's forced you to do that. Okay.
Yes.
I'm going to come to you first. Any unplanned investments in tech and people or in services as a function of COVID and how you had to suddenly change the way you worked?
Sure. Nuva Corporations got just shy of 1,000 people in 15 offices. The bulk of them are in Europe and the North Americas. Listen, over a space of 72 hours, we had to globally make a decision to move folks that are, like Paul said, working in the big offices, operations and so on, straight into their home function. But there was a critical piece that we had to keep operating in a central a controlled basis, and that's where we monitor transactions, making sure, again, coming back to our customer, continuity, demand more, flexibility, more payments, where we monitor those transactions. Now, those sort of things you cannot bring just home. You still need to have it centralized because of the servers, the database. So a significant investment has gone into that, but also similar to what Paul says, going forward, we're looking at how to bring the balance that we require working from home in the office. But I must add, one of the things that whilst the productivity has gone up, all of a sudden the longer hours, the time that you would spend going into the office, which is a me time, read, sleep, whatever, is disappeared. It's literally, you come out, you walk into another room in your house and bang, it's there, it's sitting there. And that's the challenge. That's the real challenge, that when we go back, that'll be something to look at.
Yeah, I agree. And I want to ask a question on that in just a moment, but let me finish off with this one. Nischa, what about you? Banking Circle, did you have to make investments that you weren't expecting to make in technology and people and services? What about you at Banking Circle, Nischa?
I think I completely agree with what Paul and Praf are saying with regards to people. I think people are underestimating the well-being of people working from home. I think I've read terms like that they are fearing of leavism and presentism. So people, when you're at the office, you're presentable, they see you do work. When you're at home, I think people are more inclined to prove that they are at work. So what's happening is they don't take breaks, they work when they're sick, and they work during holidays. I mean, I haven't been on a holiday, I'm not talking about me, but just in general, because we just work from home all the time. And I think that's now more coming up, and that was less there when you're in the office. When it comes to technology, I mean, Banking Circle is built on technology, and we cater for the unknown, and we actually enjoy not knowing the unknowns. That's how we operate.
So I guess the modern tech stack, you could scale it in the way that you wanted to scale it during COVID. You've all started to edge towards this point about employee engagement, well-being. Nischa, you made some points there about presentism. Praf, you talked about, you've lost the me time of the journey into work, and perhaps, one might have taken a nap. Now, I happen to know you cycled 12 miles into work, Praf, so I hope you're not napping on the bike. So I'm going to come to you first for reassurance on that point. And then I want to talk to you about how you help manage people during, a plague year. How do you make sure that they are appropriately engaged and supported, and that their well-being is something they take seriously as well as you? So, Praf. Oh, has Praf?
Okay, so you broke up a little bit.
Let me
you
try
broke
that
up a little
again.
bit at the end, but I got the question, so no problem. So I do cycle in and out of the city on a daily basis, but I don't nap. It's dangerous to nap. But anyways, we've definitely focused on our staff. They are the key to what we do. They are essential to everything that we do. So we've incorporated yoga sessions, step challenges. We had one individual who in HR averaged in a space of 2 weeks more than a couple of hundred miles of walking.
Oh.
But the challenge was sitting at your desk walking. So so and cycling and weightlifting and those sort of things. We've also incorporated meditation. We've brought external speakers in to actually help us with that particular program. Celebrated areas, religious functions, because we have certain groups that have certain religious things that we've celebrated as a company. Doing town halls every quarter, making sure that the entire 900 plus people turn up and see what the CEO has, talks about things that we've had, COVID within our family that needs to be addressed and shared. So we've had all those things.
Okay. And Paul, is it the same for you? Are you competitively weightlifting and doing more yoga than the rest of your staff? Is yoga the answer?
Yeah, well, we do the yoga sessions. I don't do the yoga sessions. We do the fitness sessions. I don't do the fitness sessions. I do a bit of cycling. I do a bit of cycling into the office though, so that's probably the common theme. But I use an electric bike, so that's probably a bit cheating. So yeah, we've done all those things. We do a two weekly all hands where we have a topic and we'll talk through it and everyone will have a discussion around it. The big change, I suppose, I've seen is in the early days of COVID, there was lots of drinking meetings with teams. That seemed to, I think people got a bit bored with Zoom and Teams and everything else over the time. But I think that's totally died down. And sort of what we're seeing now is almost this drift back to the office, certainly with the new joiners who just do not like, not meeting people. So I think in the office now we're seeing probably 10 to 15 people in the office out of our 65 staff. And they're generally on the sales side, or that there are a few operations people that just have had enough of being at home. And, it's obviously a personal decision. They go in, we let them come in for the meetings, but it has changed over time, I think. But we do all of those sort of nice things like the yoga and everything else. And we kept that going through the whole process. Some people engage, some don't. All hands, everyone tends to actually come to, and they seem to work quite well. But yeah, I think the team drinking sessions have definitely disappeared. But I'm sure they'll be back in the club now.
Let me ask a question for Nischa, because for you it must be really tough, Nischa. You're in a sales role. You surely want to get out there to those client-facing events and the meetings. Surely you're getting fed up now, and you want the world to open up a little bit just to make sure that you can not only make those sales, but you can maintain those relationships. Nischa.
Yes, definitely. It's a key part of our job. And it's the conferences, the meeting of people, building up the relationships. It's not only with our clients, but like I said, also with our colleagues. And we also have a social committee, and had done a virtual cocktail class, and we have a What's Cooking Good Looking class online now. So we've moved from drinking and actually cooking together with the colleagues. But yeah, again, I can't wait to go out there. I even jumped. It used to be like, I don't want to go out flying again. But now I can't wait to go out and see clients and meet new people. So yeah, definitely key to our jobs.
Okay, perfect. So as we come to the end of our time together, I'm just going to ask, first of all, Paul, the question which has come in from the audience again. Did the FCA issue far too many EMIs in the last decade, and are there too many TPPs in the open banking directory? Surely, these hundreds of small organizations, these little innovators, will not survive commercially either post-COVID or in our new Brexit world. Paul, to you in the first instance, can I have just a quick reaction?
Yeah, of course. I think there are probably too many. There probably needs to be consolidation. I think the reason they're there is because people see niches in the payment infrastructure where they think they can make a difference. Some do, some don't. I think the UK I think the FCA now is becoming a bit stricter on how those firms are managed. Certainly from a prudential perspective, they're a lot tighter now on, safeguarding segregation of funds. Smaller firms will struggle with some of that because it's very demanding. I mean, we've done a lot of work on that and hired a lot of new people in last year to handle that. So I think probably too many. I think there will be consolidation, and there always has been, but I think it will continue. And I think some firms, combination of COVID and new regulations, will probably cease to exist or be subsumed in other organisations. But I think there's a need. I think it's good and vibrant that firms can set up and do this thing. I think it should be allowed because I think it pushes the whole industry and is benefit to businesses and consumers in the longer term.
Okay, perfect. Well, I thoroughly appreciate your answer there, Paul, and that is indeed what we've seen over the course of fintech. We've seen various waves of innovators, and then absolutely some get bought, some merge, some die. It is the natural way of things. But as we've reached now the end of our time together, in terms of what's hurt more, I'd say definitely the jury is still out. We're still in the honeymoon period, I believe, with Brexit. It's caused a great deal of complexity and cost, but much of that pain has been obscured by COVID. What's really interesting with COVID is how well set up, well managed, and technology first organizations have coped with COVID. I'd like to thank Paul, I'd like to thank PIF, and of course Nischa for all of their sizzling repartee. They're obviously friends from way back. I feel I've finally been admitted into the cool kids club. Thank you very much to all of you. I would like to thank our panelists. I'd like to thank our audience for your time and attention, and indeed a couple of questions. Thank you very much. I hope to see you all in person, I hope, and until then, goodbye.
Thank you, guys.
Thank you.
Bye-bye.
Bye-bye.
Louise, thank you very much indeed. I'm sure